Welcome everybody to the daily recap show where we talk about stocks and the financial markets. My name is Chase. If you like this video, please subscribe, hit that notification bell as well as the like button and leave a comment for the algorithm. Let's get into it. This is the daily heat map of the S&P 500 and US stocks traded mixed on Monday as investors assessed signs of progress in the US-Iran peace talks, while shares of SpaceX fell for a third day in a row. And that was kind of the theme here today. The big boys took it on the chin. Everything else really gained broad-based market improvement. For example, AVGO was down 4% today, along with Nvidia, which was down just shy of 1%. Now, infrastructure as a whole was down, generally speaking, as passive money flows out of Microsoft. It generally is going to come out of Oracle, Palantir, all of these names, just because they're all grouped in like one category. Google and Meta had a really ugly day today. Specifically Google, at one point it was down nearly 7%. Amazon was down 4.32%, but everything else was largely green except for a few select sectors, some of the tobacco names, some of the industrial names, particularly the aero and defense names, right? And then, some of the cyclical names here as well. But everything else was actually really green. For example, if we look right here, you can see the RTY, right? The Russell 2000, which is the small cap, high beta index, was up 1% today against the S&P 500, which fell 0.23%. Look at that dramatic alpha right there. Absolutely insane delta between the two. Now, when you actually look at the stocks that gained, there were more sectors that actually gained here today, with technology also slightly in the green, right? But energy gaining, financials gaining, utilities gaining, industrials, healthcare, real estate, all gaining as well. The only reason the S&P 500 fell had to do with a couple of big sectors. For example, the XLC was down 2.28%. We know that has Google, Meta, Netflix in their names. XLY, which has Amazon, and then we also had software, which really took it on the chin here today. The IGV was down 1.88% for the day. Globally, it was actually kind of green, a slight update, mixed in aggregate, but an update nonetheless. We saw that Europe was sort of mixed. Asia, China gained, Japan gained, South Korea gained, as you guys can see right here. But the broad Australasian regions, when you look at like the Philippines, Taiwan, Indonesia, these names, right? Australia, New Zealand didn't do so well. South Africa was red. The Middle East was kind of green. South America in the green as well, and then North America slightly red, mostly because of the S&P 500. But again, the small cap indices definitely outperforming for the most part. This is what the factor analysis looked like. I just didn't get to it before. Large cap growth was the only factor in red. Everything else actually gaining here. So we definitely are seeing a broad market rotation out of the large cap names into pretty much everything else, which is a really fantastic story when you look at it. Many people are saying, when's the broadening happening? This could be the start of it. Now, we do need to see a couple of days, I would say even a couple of weeks of this very clear broadening out happening for us to definitively say that, it is happening. But nonetheless, a very constructive day for the broad market action and the broadening that we would love to see if that does come to par. Now, ultimately, what's moving markets today, what moved markets last week, and what will move markets for the week ahead is a couple of things. Now, we did get some news on the Iran-Trump war. The Trump delegation and the Iran delegation are right now in Switzerland, and they are negotiating the 60-day ceasefire peace deal. We don't know what's going on, but there's so many news headlines coming at two different things. For example, over the weekend, we saw that Trump threatened Iran's negotiators as the two sides met for talks. I'm not sure if you want to threaten your negotiators, but I guess maybe it's a part of negotiating. Then we got this news headline today that US and Iran make progress in talks to aim to keep Hormuz open. At one point, Hormuz was closed. At one point, Iran said they're going to charge tolls. Then Trump said there was never going to be tolls. So there's a lot of back and forth. But right now, what we can say definitively is that talks are currently happening in Switzerland. There was news about the delegation leaving. That's not the case. The delegation on both sides are right now in Switzerland having conversations. We'll see if this continues to be the case. But as it is right now, based on the broad market actioning, the market is giving these, negotiations the benefit of the doubt. In other news, from a political standpoint, Keir Starmer officially resigned. The people were not happy. The fever reached a pitch, the fervor, I should say. And he resigned, and he probably should resign. His performance has been absolutely pathetic. And I think this is like the sixth or the third or the fourth UK prime minister in like 6 years. Absolutely crazy. These prime ministers getting getting absolutely ran through by the people, but that's because they're doing such a disappointing job. In other market movers here today, Getty Images was up 80% and at one point 180%, jumping so much in response to a deal with OpenAI. OpenAI will be able to display Getty image licensed content in ChatGPT responses, right? And now ChatGPT is going to train its models using Getty Images content. Really, really good deal. I think Getty Images will probably double or triple revenue as the year goes on. And then Alphabet, guys, one of the biggest losers here today was down 5.3% after a senior DeepMind AI researcher, its scientist, John Jumper, announced he is leaving the company. Jumper won the 2024 Nobel Peace Prize in Chemistry for his work with the AI model AlphaFold. He wrote on X that he will join rival AI company Anthropic after nearly 9 years at Google. And then for everything we saw today here, guys, there was 3,300 decliners, 2,900 advances, outflows in all of the major exchanges, the S&P 500 falling 0.26%. Guys, at one point, the S&P 500 was up 0.59%, but then we saw just a rotation happening underneath the hood. And, you're going to celebrate your winners. The S&P 500 has been a big winner over the last couple of years, and that's why that rotation, and that's why we actually did see the move that we did there in the market. Now, looking at market momentum, we continue to have lost the 5-day, which again is not constructive, because once we lose the 5-day, we tend to lose a lot of the other moving averages, and these are teetering at the 50% mark, as you can see right there. But if you do look at it in aggregate, the longer term averages remain constructive. As long as this is the case, you're going to be buyers of dips. Now, guys, looking at the charts right here, the market isn't closed. I'm recording this a little bit before the close, as you can see right there, simply because, I got stuff to do very, very early here in the morning as it pertains to work. So I do apologize for doing this a little bit earlier than usual. Nonetheless, you can still look at the aggregate and the market in total. And what we can see right here is, some of the large cap names taking it on the chin, but it's not a disastrous day. This is actually the type of price action we were sort of looking at. Our thesis over the next couple of months based on seasonality is that we are probably going to see, the S&P 500 and the Nasdaq 100 move lower. And we are probably going to see a bit of a broadening here. And we are starting to see that. Look at the Russell, look at the mid caps, look at small caps. They're green here when some of the broad market names, the large cap market names, are in the red. Now, international stocks, slightly in the green. It does look like crypto is catching a bid there as well. And this is actually really constructive price action because we saw crypto do really, really well on the weekend, really, really well here on Monday. Hopefully, this could be the bottom here for crypto. It does look like it. But, had you said that right there, we did rally up and then we did go down. But, we're sort of putting in an equal low relative to this low right here for Bitcoin, at least. Ethereum is looking a little bit uglier. But when we actually look at the volatility index, it's still in that mid-teens range. Definitely has collapsed after the Hormuz situation, as you can see right here. The 10-year yield did gain, sitting at the 4.5% mark. And I think that's probably where it's going to stay. The dollar is strengthening. I think it does look like it's going to be building out and sort of rallying out of this base. That's really, really a good thing. If we do get to those highs right there, that's going to be absolutely insane. Do I think we're going to get there? No, I don't think we're going to get there. And then looking at gold and treasuries fell 0.76%. So too did gold, silver, crude. Guys, we may even see a 6 handle on crude. We said we were looking for a 7 handle. We may see a 6 handle, but I think we're probably going to stay in that 70 region for crude for now until we get a definitive agreement where the US agrees, Iran agrees, Hormuz is open, and I think we're probably going to see crude here in the $75 region. But let's go ahead and talk about the S&P 500 here, guys. Absolutely insane when you look at it, right, guys? Just an absolutely rip-roaring rally. The S&P 500 still trades at like 21 times earnings at the moment. Still fairly cheap based on just earnings growth. A lot of the move we've seen this year has been on earnings growth. But we are starting to see a little bit of trouble at the highs right here. You can see that we've rallied, put in an all-time high. We were unable to take that, and we are slowly moving lower. Many people will say this is a sort of like a lower high on technical analysis, but we don't like to use technical analysis. We sort of like to use a valuation average score on this channel, along with some technical indicators like momentum, right? And ultimately, I think what you want to see right here for the S&P 500 is a pullback here to the 7,000 region. If we can get that, you're looking at like a teens multiple of the S&P 500 that will coincide with the 200-day moving average, which is the only technical indicator they use on Wall Street is the 200-day moving average. I think the Fed, the Trump administration, are also looking at the 200-day moving average. So I think we're going to see something like this, right, where the S&P 500 is probably going to like fall right here into this June, July, August, September period, which is a seasonally weak period for the market. We're going to have a little bit of a consolidation, right? And then we're probably going to sort of like rally up from there. Is it going to look this clean? I don't know. I think the 200-day moving average is going to do something like that, where we're going to bounce off it. We may even go a little bit like below it, and like freak the bears out, freak the bulls out. If I just was to delete this and sort of use a different color, it might look something like that, right? Where we break below it, bears start freaking out, very similar to this situation right here, and then we go on like a rally, and then we see 8,000 S&P 500 by the end of the year and rip the socks off the skis. I'm thinking very similar price action here for the Nasdaq 100, and based on the price action we've seen here for the Russell 2000, I think during this time when the S&P 500 falls, we can actually see the Russell 2000 like rally, right? Like definitely keep going up right here. We can see mid caps keep going up right here. The small caps, we can see them keep going up right here. I think we definitely are due for some form of a broadening here in the market. And I think that broadening will be very, very good and beneficial for the market as a whole. I think we might see a broadening in international stocks as well. But what you have to understand is when you look at this index, right, which is the international index minus America, like you have stuff like SK Hynix, Kioxia, you know, it's sort of in this index right here. You have stuff like Samsung in this index. So you are exposed to tech as well quite heavily. So do be aware that like if you're inside the DRAM ETF, right, and if you're inside the DRAM ETF and you're inside the VEA ETF, right, like a lot of the holdings in here, like there'll be a big weight in the VEA index. You know, you'll get like stuff like TSM, those type of names in this index here. So just do be aware of that. So you're not like doubling up on like positions. Now, looking at the DRAM ETF, guys, this thing continues to rally. I saw the $100 covered call for 1 month from now, and I'm getting a bit worried. I am getting a bit worried there for my covered calls, because I don't really want to sell at 100. I think this ETF in 2027, 28 is going to go to like 200, right? But I did sell some $200 covered calls to make some income here on this position. We'll see if it gets there. But again, it's only a month out, right? So the stock needs to rally another 25% from here. Can you do it? For sure. Absolutely. But I do think we are going to see a little bit of a pullback here in these memory names, in these tech names, in some of the large cap names. Even in some of the semi names. Now, the semiconductors have been on an absolute tear right here, and I do think that, you know, we do need to see some form of a pullback here, just to reset expectations, a higher low for us to continue to move higher. Now, specifically in the semiconductor space, I do like Nvidia, guys. I think it's the cheapest. It's got the widest moat, and I think for a very long time, this is going to be the stock you sort of want to buy. Now, the market cap is really, really big, so the returns that you will get from something like at a 5 trillion market cap is not going to be like exceptional. But I think this is a name that can compound at like 12 to 15% per year, perpetually, forever, until its moat really gets disrupted. But looking at some of the smaller cap names in the semiconductor space, if you are looking for smaller names, you could look at names like Marvell. Marvell is definitely one of them. You know, I think we are going to see some consolidation right here. But this is what, a $300 or $400 billion market cap, somewhere along those lines, 266 billion. So if you are looking for a smaller name, Marvell is probably next in line. It has run up a lot, so you know you are sort of buying the top right here. So you probably would wait for a pullback. In terms of other names, right, you could also look at something like Micron. Not a crazy valuation, 1.34 trillion. I think we probably are going to see a $2 or $3 trillion valuation on Micron sometime in the next 12 to 18 months, right? So you are buying a big name right here, a very secure name, and again, you are buying at all-time highs, but the valuation isn't crazy on an absolute basis relative to semiconductors, but on a relative basis to history, yeah, the valuation on Micron is crazy. But it really depends on what the cyclicality for memory is like looking ahead. If it continues to be extremely cyclical, then it's always going to command that lower valuation, again, on an absolute basis and a relative basis. But if there is normal cyclicality for memory, this thing needs to re-rate to like a 20 times, 15 times plus multiple here, similar to the S&P 500. But this is where we are right now. If you're looking at some of the hardware names, look at Micron, look at SanDisk, right? SNDK is one of them. Look at stuff like, again, Nvidia, Marvell. If you look at sort of like the semi-memory or storage names. In terms of software, which I still really, really like, I think 5 years out, we're going to be looking at these software names and you're going to be like, wow, why didn't I buy software right there? Now, this chart looks really, really ugly for ServiceNow. We saw a massive downtrend where we broke below the 200-day moving average. We put in a bottom. We tried to rally, rejected right on the 200-day, right? And now we're back down to this $90 region right here. Not a good look, guys. This is very, very ugly technical analysis. Not what you want to see, but I do think there's value right here because ServiceNow, right, is trading at 21 times forward 2026 earnings, guys. Absolutely insane. I think the stock is cheap. I think you buy ServiceNow right here. I also think you buy Reddit right here. Now, these software names didn't do too well. Reddit was down 1.18%. I think we're sort of putting in a low right here for Reddit, and very similar to service now, it just can't get above that 200-day moving average. When we look at App 11 Corporation, very similar situation. It did break above, couldn't break below. This is on the back of its earnings, and now we're back into this downtrend, down another 1.42% here for App 11. So these are the software names I would go in and buy. In terms of the financial names, I really do like Lemonade. It's an insurance company. So those of you that don't know, I've been buying a lot of Lemonade at these levels right here. I think the stock's cheap. I like what the management team are doing. I really do like this name. And then in terms of sort of an industrial stock, I've been buying Tasmea Limited. It was up 4.14% today. Now I have been buying at these highs right here, and I think it's super cheap. Let me show you why. So Tasmea in the trading 12 month, this is essentially a serial acquirer in Australia that acquires companies that help in the mining space, but they've recently acquired a number of businesses that's helping with Australia's electrification as well as the data center build out. And as a result, their growth is going to expand significantly. Now, Australia is about 2 to 3 years behind the build out in America. So pretty much where America was in like 2022, 23, right? That's where Australia is right now in the data center build out. So this is a great way to play the theme. Very similar to a ticker symbol like FIX in America, comfort systems. This is how you would play that in Australia. Now, the revenue is going to go from about 700 million in the trailing 12 month to 1.2 all the way to about $3 billion in 2030. This is the consensus estimate, slightly below consensus estimates. Margins, EBIT margins expanding to about 15% in that time. Revenue growing quite significantly. You can see we have some of the inputs right here. Now, if we sort of like look at consensus revenue estimates, right, we then apply a 15% EBIT margin, which again isn't crazy. To get a 447 EBIT number right here. Now, the current EV to EBIT is 25. You're looking at a 20 multiple in the future, right? So in 2030, if we just apply 20 multiples, so multiple contraction, you get an $8.9 billion enterprise value. Subtract their net debt, which is about $93 million. You get the equity value right there, divided by their shares outstanding. Now, I'm assuming shares are actually going to grow 5% every single year, which is, it's a bit on the high end. Normally their shares grow out about 3 or 4%, but we're building in a margin of safety. If you sort of assume all of that, you're looking at like the current stock price at $9.05. You're getting a stock price in 2030 of about $25. That's about a 23% compounded annual return with a 1.4% dividend yield. If we then just go to like a 15 EV to EBIT, right? So like some serious multiple contraction, the multiple nearly getting cut in half. You're still looking at like a 17 compounded annual growth rate. And again, this discounted fair value, that would put the stock at $9.29, and you're still under fair value by, I would say 3 or 4% at that point. And that's using a discounted fair value of 15%, right? If we go back to the $20 right here, the fair value is like $12 in the stock. The stock's $9. So you're looking at like 30% under its fair value. Absolutely insane. And this discount rate might even be a bit high based on how this company has executed over the years. You could probably apply for a 12.5% discounted fair value, and at that point, right, you're looking at like $13 fair value. Something else to note, the management team owns 60% of the shares outstanding. They've never sold a share, and they keep buying every single year. All of their dividends that they get goes towards buying new stock. The management are very well aligned with the company, and I think this is a company that's going to absolutely execute. And again, the multiple is not crazy. Even a 15 multiple, you're looking at a 17% compounded annual growth return. Very strong returns, right? So I'm bullish on Tasmea, and I'm very happy I actually found an Australian company that I can actually go ahead and put my money towards. And I still think it's very cheap up here. This is probably a $10, $11, $12 stock by the end of the year, not without some volatility. Now, looking at crypto, I think we're finally starting to put a bottom in. We've had this capitulation. All of the bulls are now gone. I think higher from here for crypto, Bitcoin, and Ethereum. And all in all, guys, I think the market is definitely poised to go higher. Don't fight this trend. We definitely are on a bull trend, but don't get me wrong, we are in a seasonally weak period. I think we do expect volatility here in the market and then higher from there. Now, guys, looking at sentiment, this is the AA sentiment survey, and we continue to remain here in this slightly bearish sentiment. You can see bearish sentiment did tick down, but we still are, outnumbering the bulls by about 3%. That is significant. Bullish sentiment did tick up as well. So the trend is definitely in the direction here of the bulls, but definitely still a lot of pessimism still out there in the market. And I think what the bears are looking at is something like this. They're looking at what historically happens in June. This is where we are right now. And what we normally see is a high here in June, and then we actually have a bit of a pullback. And the S&P 500 has sort of followed this quite significantly. We did get a bit of a rally, a bit of a pullback. Buyers bought the dip, came in, and normally what happens is we actually do revert to negative territory. So, if we see the S&P 500 fall maybe 2, maybe 3% over the next 5 to 7 trading days, don't be surprised. That is seasonally normal. But if we are to fall, let's say 3, 4, 5%, maybe even as much as 10%, right, you want to be buyers off the dip, because like when you look at valuations, again, relative to history, like the Nasdaq 100 is sort of at the lower end right here. The Russell is sort of at the lower end. This is the high end. We're at the mid end right here. The S&P 500 very likely goes to like a 19 times, potentially 18 times earnings multiple. And you can see that these multiples are now getting to that teens level based on earnings growth. So if we do get a pullback, right, and earnings continue to be very, very strong, I think you want to buy the dips, because the multiples are going to come in very, very quickly. But the multiple situation will only depend on the macro. And right now, economic growth is looking really, really good. We are trending lower, as you can see right there, but we're still looking at like about 3% growth here for Q2. That's the GDP estimates, and sort of at the top end of the blue chip consensus. So I think from here, we probably just stay at this level. When we look at the city surprise index, right, this is sort of where the midline is right now. So economic surprises have come in significantly better than expected. I do think that this probably is going to come down ever so slightly. So we are probably going to see a bit of downward economic surprises here for the economic data, but I think that's ultimately just going to support the fact that you want to be buyers of those dips, because the economic data has actually really, really been surprising at how resilient the economy has been. Now, looking at data for the rest of the week, tomorrow we get the ADP numbers, as you can see right there. Then we get the composite PMI, so we get some manufacturing data, very, very important data here for the economy. On Wednesday, we get the new home sales data, and then later on in the week, we actually get PCE data, and then we also get some very interesting, the Fed bank stress test results right there. But so we get inflation data, we get manufacturing data this week, a big day for data. In terms of earnings, not super big, except for Wednesday after the close. Micron is reporting their earnings. Now we kind of know what they're going to report based on the CapEx expenditures for some of these big names already, but Micron is reporting after the bell there on Wednesday. FedEx after the close tomorrow, as well as Carnival Corporation before. But really, it's really everything. All eyes are on Micron ahead of its earnings, guys. But if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit the notification bell, as well as the like button, and leave a comment for the algorithm. Cheers.